Advanced Micro Devices, or AMD stock, has had a rough start to the year, down about 40%. And now, as we're looking at it after hours, it is jumping a bit higher following their first quarter 2022 results. I'm looking at a stock that's trading at a low 20s PE with 60% growth. That strikes me as very interesting. So what do they do? Let's review their first quarter 2022 earnings, and where does AMD stock go from here? So AMD is a fabless global microprocessor company selling the latest chips necessary to power core industries like data centers, PCs, personal computers, and gaming. When I say fabless, that means they don't actually manufacture it themselves. They're outsourcing it to other players. And you look at this business and you split it up across different segments like computing and graphics and their enterprise embedded and semi-custom chips. Really, this means computing and graphics. What you're looking at is the CPUs tied to the personal computers, the notebooks, enterprise embedded and semi-custom. That might include large segments like server and cloud computing. You look at the growth across these two. Computing and graphics, which includes CPUs and GPUs, it has had some nice growth. It's effectively doubled over the last 2 years. But the real growth has come from their enterprise segment, which has gone from $2 billion in revenue to $7 billion plus. And the profitability here has dramatically expanded from under $300 million to nearly $2 billion over the last few years. They've also seen dramatic expansion as well in their computing segment, going from $600 million in profitability to over $2 billion. So you've seen hyper growth and hyper margin expansion. The challenge here is, should we give a thumbs up to AMD when they're fighting tough competitors like NVIDIA and Intel? And so looking at it, yeah, they are taking share from, Intel. Especially in the CPU space, where you see incrementally since 2020, they've been, chipping away at Intel's dominant position. And so when I see this does get me excited because it means, hey, you potentially have a company with an unrivaled value proposition, or you have a value proposition that is increasingly resonating with the marketplace, leading to market share gains, and that could potentially lead to future growth, in the years ahead. So I do like seeing data points like this. The challenge is, and personally I find this space is just really tough to invest in, as you need to constantly innovate, launching newer and faster products just to remain competitive. You think this is where you need to be and this is the growth curve, and then all of a sudden someone launches a product that accelerates that growth curve, innovates faster than you expect, and all of a sudden you're underperforming and you're losing share, like Intel currently. So AMD also recently completed the largest acquisition in the history of semiconductors with the purchase of Xilinx, which is focused on programmable logic devices. So all the recent data points looking at AMD suggest they continue to execute and take market share. You're looking at 70% plus growth in the most recent quarter. And not only is it attractive growth, you're looking at margin expansion. You see gross margin up 7% year over year, from 46% margins to 53% margins. That is just incredible. You're seeing net income on a non-GAAP basis up nearly 150%. This company is delivering and they're seeing margin expansion. And you're seeing that across their different segments, from computing and graphics to their enterprise embedded and semi-custom segments, where their operating profitability is growing much faster than their revenue. They're getting significant operating scale on their business. And they're also guiding to very strong results and a very favorable outlook for 2022, saying 60% revenue growth for fiscal 2022. And this is part of the reason why the stock is popping after hours. You're looking at a company saying, hey, we're going to have very strong margins. We're going to be buying back shares, reducing the share count, and we're going to be paying very little in taxes, low teens rate. So high profitability, continued hyper growth. Generally when you have a stock posting 60% growth and trading at 20 times earnings, it's tough to hold that stock down. So the question is, what's the right price for AMD as we weigh the different fundamentals? First, quick plug, if you're looking for potential actionable ideas, stocks that you could potentially buy right now, go to unrivaledinvesting.com. Each week I call out new ideas, and I also call out my personal investment journey if you're interested. This weekly letter does keep this channel going, so if you enjoy these types of educational videos, please check out Unrivaled Investing, or please make a point of hitting that thumbs up or hit that subscribe button. So let's dive right in to keep going into thinking about, where do we think AMD goes from here in terms of the stock price? The reality is, look, they are clearly powering many leading industries that could drive potential growth for years into the future. This is a nice, favorable tailwind for the business, whether or not it's tapping into 5G communication infrastructure, effectively providing the chips that are critical for cloud computing, supercomputing, gaming, adaptable intelligent systems. They're tapping into a lot of different things, and they're providing the chips necessary to roll it out. So as I look at the valuation, keep in mind, this is a hypothetical framework for considering it. It's currently around $160 billion valuation market cap, and they're guiding to around 60% growth. I'm putting a range of 50 to 70% growth for the year. They're also guiding to around 30% operating margins. So I'm once again putting in a range around that, and they said around 13 low teens tax rate. So that does imply this business for 60% growth is only trading at a 20s, low 20s times earnings multiple. If you find any company that you think will have very stable profitability in the future, and continued growth, generally, if you're paying, let's say, a 1 times or under price to earnings to growth ratio, that can be extremely compelling. That's one of the things Peter Lynch previously called out. And so this is the type of thing that could get a lot of investors excited. But the fact that it trades where it does, I think does reflect that there's some Wall Street skepticism about their ability to keep their margins in the future. And we'll talk about that in a second, because usually you don't find things growing at 60%, trading at 20 times earnings. So the question is AMD dirt cheap? And so part of the challenge, in my opinion, is that these chip manufacturers are benefiting from shortages where effectively you have strong demand and you're effectively not able to keep up with it with significant, with effectively not able to increase the supply to match demand. And you also have general supply-driven shortages that's relating to a beneficial environment where you're getting better pricing. And so it does raise the question, is it possible that they're over-earning? And you can see just a few years ago that they were closer to 0% operating margins. Now, they're recently at 24%. Management's guiding to 30%, which is not even on the chart over here. So you see, look, that's a really tricky question. I don't have enough confidence with the supply and demand aspect and knowledge of AMD's chipset to say, yes, I have high confidence they will be able to maintain 25 to 30% plus margins, not only now, but into the future. And I think if you're a shareholder in AMD, you should have some degree of confidence that you're saying, yes, I strongly believe they'll be at 30% or 25% margins going forward. And I look at this, and it's challenging because you look at history and look at long enough time frame, and the reality is that oftentimes shortages lead to gluts. And if you have a period where, let's say, you have an overproduction of chips, let's say 2-3 years from now, does that lead to a much lower margins and even lower valuation? So I look at AMD thinking, yeah, they are tapping into immense potential. They have immense potential tapping into many different secular tailwinds. For example, cloud computing, providing critical chips for many different industries. But it's personally too tough for me, considering that I can't quite forecast, with a high degree of confidence, what their margins could look like in the years ahead, especially when it wasn't that long ago that they were at closer to 0% margins in a lot of these segments. So if you enjoyed this video, please make a point of hitting that thumbs up and hit that subscribe button. Thanks so much for tuning in.